I'm Alan Kenny, Editorial Director with REIT.com, and I'm in Chicago for REITWeek 2013, NAREIT's Investor Forum. Joining me is Glenn Mueller, professor at the University of Denver. Glenn, we've heard a lot about volatility in the REIT market. It's an area that you've researched pretty extensively. I mean, is there any sign of this trend kind of abating for REITs?
Well, good question. We just finished a big research study that NAREIT supported, looking at the new derivatives that have been out there for the past number of years, the leveraged exchange-traded funds, or leveraged ETFs. And those leveraged ETFs were one of the things that we found created a lot of volatility back in the last recession in the 2008, 9, and 10 time period in REITs, because they were having to rebalance their portfolios at the end of the day. And that was creating extra swings in REIT stock prices literally on a daily basis. As the economy started to improve, fundamentals of the real estate market improved, those kind of went away, and we went back to a somewhat more stable market. As you know, so far here in 2013, we've seen the economy improving, fundamentals for real estate improving, REITs doing very well, their stock prices moving up very nicely, and then last week hit. And all of a sudden, what people have been predicting for the last couple of years with interest rates moving finally happened. 10-year treasuries jumped from about 1.7 to about 2.1% in just a couple of weeks. And with that, all of a sudden, any high dividend yielding stocks, which would be utilities, REITs, and other things, all of a sudden took a big correction. Now, if people really thought about it and understood how REITs work, that shouldn't really happen. But it does, because, say, well, any high dividend yielding stock is like a bond and therefore is going to go through the same kind of correction as a bond. There's a correlation there. And the problem is that in the short term, the market is emotional, whereas hopefully over the long run, the market is logical. So unfortunately, I think we're going to see some volatility here over the next few months as we sort through what's going to happen. And a lot of it is what happens with the Fed chairman and whether or not they actually start to back off on their bond buying.
I understand there have been some big developments in the non-traded REIT area.
Yes, one of the new things that is happening is many of the non-traded REITs are considering moving to, and a number already have, moving to a daily net asset value. So similar to what institutional investors do, the NAREIT index, the index of all the properties owned by institutional investors, the pension funds and endowments of the world, they strike a price once a quarter, but now with technology, et cetera, we're able to actually value a company's properties on a daily basis, with computer technology. And so 4 or 5 of the non-traded REITs have moved to what's called a daily net asset value. And some of them are now out raising capital through some of the Wall Street brokerage firms with clients, where instead of this daily volatility that we see in publicly traded REIT prices, we're now having a private market value of what the actual real estate is worth in the marketplace. And some of them have had a little trouble raising capital. Others are starting to do it quite well. And this may become an alternative for the REIT industry, for investors to say, oh, I can own both one that is a little less liquid. You can't necessarily sell at any given moment during the day, but you put your shares up for sale, and they are redeemed by the company and then resold through the company, and done at the value of the real estate. So we always talk about REITs, are they trading above or below net asset value? These REITs will trade at net asset value all the time in the private marketplace. This will open up a whole new area for portfolio managers to look at, do I think publicly traded REITs are overvalued or undervalued versus their NAV, and I can switch into daily NAV REITs to pick that up as well. Publicly traded REITs could also set up a new share class to do that as well. So it's a new development in the marketplace that if it catches on and does well, could be very interesting for the REIT marketplace, both for raising capital and for investors to have what REITs used to be, which is a less volatile pricing than we're seeing in this very volatile stock market.
All right, well, thanks a lot for your insights, Glenn.
Okay.
And for more on this and other REIT news and analysis from REITweek 2013, be sure to check out REIT.com.